Over the last few years, we've seen a real erosion in the traditional barriers to entry that banks have enjoyed. Historically, they've had an advantage of distribution as a barrier to entry, big economies of scale. And I think we've seen with digital channels that distribution barrier of entry has gone down. With the cloud and access to low-cost computing for large amounts of data, the barriers to entry around technology have gone down. I think partnerships are going to be absolutely critical. I think when you look at the fintech sector, they typically have very strong products and are very innovative, but they don't have the scale and the access to clients that banks would have. On the other hand, banks have the scale and the clients, but struggle with that innovation and with developing the same compelling products. So I think there's absolutely a win-win. In terms of models, we probably have seen more successful partnerships where the fintech provider will provide the product and banks will provide either the balance sheet and the access to the clients. There are some successful ones. In terms of acquisitions, they're very tricky. It's very difficult, it's very challenging for a big institution to be able to work with an acquired small company without destroying it along the way. And it's hard to retain the kind of talent. I mean, that kind of talent, very innovative, very nimble, doesn't always want to work in the more slow-moving environment of a large bank. Culture is absolutely huge. I think what distinguishes some of the fintech providers is they're nimble, they're fast, they put a product out there very quickly and let the market give feedback on what other features and where to take that product. I think it's a very different way of working from that of the banks, where it's a lot more slow moving, a lot more process and control. And if you stop and think of it, if you are a fintech player and you want to launch a product, you go and you shop it around among 20 VCs, and all you need is for one to say yes, and you can launch your product. In a big bank, you probably have to go have 20 meetings with 20 different people to launch the same product, and all you need is for one to say no, and it doesn't happen. So that's, I think, a key cultural challenge for banks. Understanding how startups work and their expectations is absolutely critical. There's a few elements around that. One is most startups take some time to become profitable. And especially in the early years, it's all about reaching scale in order to be able to raise their next round of funding. So every week matters. They're burning cash, right? So understanding that in being able and setting yourself up to move at that speed. So being very agile, being very flexible, because each one is different. They're very focused on simplicity and the user experience. The traditional channels in which they interact with you are not those of other companies. So for example, having a strong suite of APIs and a strong, very simple API platform with very simple documentation, a value proposition aimed at the developers, that's absolutely critical to work with a segment. That's always critical, and I think there's a couple of elements. One is you have to make sure that they have a real value proposition. They're solving a real problem with technology rather than cool technology looking for a problem. So that's a key driver. Second is why? Why are they doing this, and why now? So that's a key question that we always ask ourselves. At the same time, in the venture space, it's very difficult to pick winners and losers. So I think you have to take a very broad approach and knowing that some will grow very fast and be very successful, but most will not. I think the big incumbents have realized that the disruption is real, there's concern, and that it will affect the margins in the industry. I think they know they need to act. I think the challenge is the cultural barriers, the legacy infrastructure, and how fast they can transform themselves. That is absolutely the key challenge. One is embrace disruption. Uh, Entry is real. The fintech providers will be around for a long time. Not all of them, but those that will survive and will be successful will have a lasting impact on the industry. So with that disruption, with that entry comes change and opportunities. And sometimes partnering with them is the best defense to the business models. Second piece is just the criticality of being able to transform themselves to compete in this new environment. Entry will lead to thinner margins in key parts of banking. So the ability to lower costs through changes in the infrastructure, the ability to leverage low-cost digital channels, the ability to deliver the change expectations of customers that have now dealt with these with a new kind of provider is absolutely critical to the banks.